guys, just a quick recap of the majors and the commodities. I think the commodity market is probably and the stock market are the ones that are trending. Bond market seems to be just going sideways as we run into this week's FOMC meeting. We can see here on the hourly and the 4 hourly that for the last 3 or 4 days it's just been going sideways. That's the bond market. Commodity markets weaker, as we can see here by the index, and everything's this morning was already turning down. So that trend is looks like it should continue. And the other trend that looks like it should continue is stocks. And we're seeing, however, stocks finished Friday on a bit of a bounce, closing stronger at the end of the day, but clearly down post the inflation numbers. We're running into FOMC on Thursday morning here in Australia, Wednesday afternoon in America, and yeah, we're going to have a rate rise, but it looks like the US dollar itself has just trod water since the inflation numbers. As we can see here, the US dollar just trading sideways since the inflation numbers, as it sort of, I would expect to get a bit stronger running into the FOMC and the potential rate rise. Question is it going to be 50 basis points? Is it going to be 75? Or will it be 100? And I'd say it's going to be 75. But we'll talk about that a bit closer to the date. Right now, we've got the pound at its lowest since, I think, 85. And the yen at its highest since 98. But again, they're both well away from their moving averages. There's still a bit of exhaustion there, so you could have another leg down in the pound or a leg up in the yen. And the euro's just lost. Aussie, similar, is still away quite a distance from its moving averages and not yet at exhaustion. And both the Aussie and the pound are showing momentum divergence, which is a bullish signal in this instance. And yeah, it's just a little tricky. I think the market's just a little lost at the moment in currencies, whereas it's clear what's kind of happening in stocks, and we'd expect stocks, as they head into stagflation, stocks to come down here and be closer to 3,000, sort of by maybe not the end of this year, but certainly this time next year it'll be under 3,000. So we'll expect that stock market to continue to weaken. And that's about it. We'll see you next time.